So I'm going to call to order the May 2nd Montgomery County Employees Retirement Board meeting. Note the presence of almost every retirement board member. Treasurer Salas is on the line. So let's do the Pledge of Allegiance. So Kim, I'm going to have you lead us in the pledge.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Do you have any public comment?
No problem.
Okay, great. So I'd like to make a motion to approve the February 22nd, 2024 meeting minutes. Is there a second?
Second.
Seconded by Commissioner DeVello. Any board comments? Hearing none, moving to a vote. All in favor?
Aye.
Aye. Motion carries. I'd like to invite Kathleen up from SEI to give us a review of the SEI investment portfolio.
Thank you, Janelle. You can call me Kathy.
Only that's-
My mom would be happy. It's so nice to see you. I just wanted to start by thanking everyone for making the trip out to SEI. And I know we're going to be meeting with Janelle and Karen later, but it meant the world to us. I know it's a big commitment, a big ask to meet with us for several hours. And we always love it when clients come to visit. It really showcases our building, our culture, our talent, the resources. So thanks again. And I want to reiterate, this is such an important relationship to me. So I want to continue to offer resources, education, whatever you need so that we can continue to get you in the right risk adjusted allocation going forward. So thank you again. I'm going to start, I can't move. So I'm just going to start with the executive summary, if you don't mind flipping to the next page. So it was another good quarter. We had a strong 2023, and you can see here I have the first quarter returns. So the portfolio ended March 31st at $617 million for a quarterly return of 4.36% and a one-year return of 14.67. I'm listing the two portfolios, and this will be probably the last time I do that. The assets from Vanguard did transfer over on February 16th. So you have here the two underlying amounts. And if you remember, we do have those portfolios separately on our system. So the existing allocation that they both were with previously, it remains, they're separated, but we're able to do consolidated reporting. And I have in the presentation, if you have the hardcover, I have the portfolios combined. I have the SEI portfolio separate and the Vanguard. But obviously going forward, we're looking at this as one holistic portfolio, and I'm going to combine them going forward. So, but you can see, just looking at the quarter, the SEI portfolio is up 5.22% and 15% for the year, and the Vanguard was up 4% and 13%. So you'll see there were some benefits of active management. There's some benefits of some additional asset classes that FEI had and alternatives that really played in helping get a little more return for the quarter and for the year. So I just have the market recap here. When we look at what's done well the first quarter, it's really a continuation of what we saw in 2023. Equities were really the dominant factor. And if you think about what happened in the fourth quarter, Federal Reserve came out and pretty much said, we're pretty much done hiking interest rates and we're looking to lower. So you had this euphoria, this risk on rally where just about every asset class was positive. And we saw that continue into the first quarter. When we look at large cap, and you'll see in a minute, what was really leading the charge were the Magnificent Seven. And we've been talking about that just about every quarter. But what we're starting to see is a little broadening out, and only the Fantastic Four, which are doing well. So pretty dominant still. We saw Tesla and Apple down for the quarter. Tesla was down pretty hard, and Apple as well. But we're looking closely at that broadening within the equity market. Fixed income had sort of a negative quarter. There were some asset classes that better than others. But if you think about the expectation that Fed was going to lower interest rates, Treasury yields moved higher in the anticipation that the Fed maybe wasn't going to. So we saw yields go higher, which quality for fixed income was lower. However, when you look at the diversification, which I will show you in some of the asset classes that FEI has, high yield, opportunistic income, they were positive. So that diversification in fixed income really helped. And then finally, your alternatives, both your structured credit and your special sits hedge fund were positive for the quarter. They continue to provide diversification and risk adjusted return. So they continue to add value in the portfolio. And then finally, another SEI fund, the multi-asset real return fund, that has exposure to commodities, which helps you in an inflationary environment, which we're still seeing a little bit of. that had exposure to oil and commodities, and that did well for the quarter. So that's the executive summary for the quarter. Do you mind flipping over? I'm just going to be brief because I know we only have a few minutes for our meeting, but just to talk about the market performance, I think it helps put perspective when you look at your portfolios and understand what happened during the quarter. So we have on here, you're probably familiar with this. This is the chart that I show every year and every quarter. So the blue teal line is the quarter return. And I'm on slide 5, and then the dark line is the 1-year return. So really looking down the page, you can see large cap, again, dominant factor. And it really was a risk on market for most asset classes. As I mentioned, we had expectations in the marketplace. What I think is so interesting when you talk about expectations, the market was expecting the Fed to cut rates 6 to 7 times.
Right.
SEI was always more in line with what the Fed was, and their announcement was closer to 3. As we moved through the quarter, we got 3 strong inflationary reports, and that really has put a halt to really where the Fed is saying, okay, we may need to reconsider this. And what they're really looking for is, not just one good report. They need to see there's consistency in lowering that. So you'll hear in a little bit, our expectation is we may have to wait closer to the end of the year, and obviously we're approaching an election in November, so there's even more scrutiny if they were to cut too close to the election period. So, but when you look at the quarter and you look at the asset classes in the financial markets, really a lot of it was contingent upon the Fed cutting. So when I give you your April numbers, you can see April was a pullback, but clearly the first quarter, large cap was the dominant factor. Small cap's a little more sensitive to interest rates, but still had a positive quarter. And your US dominated your international and emerging. Japan had an incredible quarter. They finally came out of negative interest rates, and they're really starting to see. So that was really a top performer within your international exposure. You can see here in the middle of the page, your core fixed income and your long duration, both were negative. I mentioned rates, yields went higher, and SEI's outlook has been that they would go higher, even with anticipation of the Fed cutting. Again, the Fed's not looking to cut, and you have so much fiscal debt that's really keeping, especially your 10-year number. We started at 3.9 and we're around 4.6. So that's kind of remaining higher as well, which some of that hurts your fixed income allocation. But if you look at the other 2 asset classes, which are termed fixed income asset classes, high yield bonds and emerging market debt, they have done well. You have them in your SEI portfolio. Last year, they were both about 14-15%. And high yield, you can see, was positive for the quarter. Even emerging market debt had a strong year and pretty much flat for the quarter. And then finally, you can see commodities had a good quarter. Natural gas was pulled back, but oil really had a strong quarter. Again, that's in one of your funds, so that added to your absolute return as well. You could just flip to the next slide. I won't go into a lot of detail. This just really articulates my comments about fixed income. What I think is interesting on this page, if you look at the left-hand side, the US yield curve, you can see the maturities all the way through 40 years. The blue bar at the top represents where we ended the quarter, March 31st. And the black line, the second black line beneath that is really where we started the year. And, it's interesting to think, if you think you're going to have a Federal Reserve cutting rates, you would expect some of these to come down across the board. They were higher. So that really explains some of the negative returns within fixed income. However, you can see the credit spreads on the right, and that's really where your high yield and emerging markets did well. And then finally, the next slide, just to sum up, SEI's perspective, our views, and a lot of that's baked in some of our active management funds. We have, since the start of the year, anticipated that inflation will remain higher. When you look at a number of factors, it's your services inflation that's really sticky. So if you think about services, a big portion of services is wages, right? So when you go to restaurants, a lot of that is how you're paying individuals. That continues to remain high, and that's really difficult sometimes to kind of bring down. And we continue to see positive employment reports with wages still up around 4%. So that's hanging in there. So SEI's perspective is we do expect inflation to stay higher. It's going to be difficult to come down. That is implemented in 2 of your funds within the portfolio, that point of view. As far as rate cutting, as I mentioned in my earlier comments, it wouldn't surprise us. Maybe we didn't have a cut at all. I think a lot, the devil's in the details, or the devil's in the data. But the next few inflation reports, and again, I think it's not going to be enough just to have one good inflation report. Fed's going to really need to see several while looking at unemployment and making sure that doesn't go up too high, and really control those 2 areas of the market. And again, being very sensitive to the election, but maybe, closer to the end of the year. And we are really focusing on, we're positive on commodities too, but if you look at just in our active portfolios, we're really focusing on quality companies with good earnings, not your typical putting all the money in your artificial intelligence and the Magnificent Seven. So broad diversification, quality companies across the board. And again, we do expect the 10-year to remain a little bit higher. So that's it from a market outlook and an economic update. Any questions that I can answer on SEI's perspective or total executive summary? Okay. You want to spend 1 moment and look at the funds? We can walk through that. Okay, great. If you don't mind jumping to next slide. One more, please. One more. One more, please. Thank you. So before I show the combined portfolio, I thought it was important, again, just for this quarter to give perspective on where we were at the start of the quarter and where we are now. So I've listed your Vanguard portfolio. You can see again a passive implementation there, the SEI portfolio, and then how it looks from a combined portfolio. And Mike's just going to refresh what we talked about when some of you visited with SEI. But it's interesting to see, you can see areas like high yield debt, which I mentioned, emerging market debt are not in the portfolio. But when you look at it at a total level, it's less than 1%. It's only 4.4. Same thing with your alternatives at the bottom of the page. They're only 0.5%. But this is how your combined portfolio will look when we present performance. And this is really our goal, to work with you to come up to the right allocation and a risk adjusted framework to get you to your goals. And that's really, as a fiduciary, our number one priority at this point. So if you mind flipping to the next. You can see a $19 million gain for the quarter, and then you have over $25 million gain for the 1 year number. And if you flip to the next slide, please. So here's your combined report. We've listed by equity, so you can see that all the funds are listed on the left-hand side. So any place where it says the word Vanguard is Vanguard, and the other funds are within the SEI. But my earlier comments really speak to equity was the main contributor for the year and for the quarter. Just looking down the quarter to date numbers, you can see 9% for the Vanguard fund. Large cap was up 10. That's really your S&P 500, really dominated by those top growth names. Extended market is your small market, small to mid, that had a positive performance as well. And world equity and emerging market, there are two active funds, and you can see, especially your emerging market equity fund had a strong return. The 1 year number up 15% versus the 8% benchmark. And a lot of that is due to we're underweight China. China's been struggling, some exposures there, and we're overweight frontier markets and emerging markets as well as these smaller stocks. So that active management is playing out nicely from a positive and a relative perspective too. If you could flip to the next slide. And then the Vanguard Index Fund is listed there. From a fixed income perspective, you can see for the quarter, it was a negative return, as I mentioned in my earlier comments. Just looking down, your quality 4 funds were negative. But if you jump to the last 2 funds under fixed income, emerging market debt and high yield, again, strong quarters, and look at their 1 year numbers too, positive returns there. And then finally, your alternatives for the quarter, your structured credit collective fund was up a little over 6%, and your special sits collective fund is up 4%. They are actually lagged, they're quarterly lagged, which is very typical in your in how you're presenting alternatives, but both funds had a really good first quarter. So I just had them verbally. Your structured credit fund was up 6.35%. So that puts that fund at 24.9% for the year. So really a nice contribution for the portfolio. And your special sits fund was up 5.7%. That's your hedge fund, and that puts that at 13% for the year. So that are my prepared comments. Any questions I have in the book, again, the SEI portfolio separately, the Vanguard separately. I want to continue to report them consolidated, but our performance team copied everything over, very labor intensive, every performance number, every benchmark. So we're able to maintain your history, have that going forward, and I will continue to report a consolidated number. So any questions for me on the performance or the markets or anything that I could address? Hey, so I'm going to ask Mike to come up. We presented, and I don't, we encouraged to get feedback. We presented a lot of information for those who were able to come on site, and we would love to just maybe dust that off and present that and ask for feedback if we can. And we'll continue to have that conversation going forward if we don't have enough time today.
As we're switching speakers here, I have a meeting that I have to go down to Philadelphia. But the one thing
So you were serious about that?
yeah,
Needing to leave? Oh.
yeah,
Oh, that was, that's why you enjoyed it this morning.
huh? No,
So that's a legitimate thing.
yeah,
Okay,
sorry.
right.
But you guys, this is all good. But I just want to throw one question out to Dean, because he's sitting back there saying, I wish somebody asked me something. But I know that we talked about this before, and I don't remember the cycle, but when will we start having conversations about a COLA for 2025?
So, actually, I was gonna give a quick update. The actuarial evaluation report is being updated as
Okay.
we speak. That's gonna be done probably in the weeks, months ahead here, and then it'll be formally presented to the board at the next meeting. So that'll be the next step. And then typically in the fall is when they do the calculation for any proposed inflationary increase that, the board might want to consider. So we'll have that information probably early October, I think, somewhere in that range. And, at that point,
But we can start having some conversation
oh, yeah,
for that,
Sure.
right? Because I think that not only are we looking at numbers and all that, but we also have to look at strategies of what that a COLA increase would look like and pay back what all that stuff that we talked about
yeah,
before.
no, we absolutely could. We could probably include that in the next presentation because the actuary is going to be here and we could have him do a sensitivity
Yeah.
analysis and, say, if inflation was this, this is what the COLA would look like. I think, the inflation range is tight enough right now that they probably could put some numbers together that will be fairly close to what we'll be looking at in the fall. So, yeah, we can do that.
That'd be great, because I think that it's gonna be a very detailed and long conversation.
Right,
And I don't, waiting to have this until October might be, I think we could
okay,
have a lot of conversation, have a lot of things
Yeah.
figured out, and maybe we don't officially pull the pin until September, October, but at least we have it all. We know what we're talking about, we know what we're doing, and then at some point, we finally have to make that final decision. But I don't wanna wait.
yeah,
too
no,
long, so
I
just have a
agree. So
conversation.
you know what you're dealing with.
Right, yeah.
Because with, the way the law is written,
right,
it's all in, you can't prorate it, or if you're gonna do it, you do it.
Yeah, right,
It's 100%.
right. Plus SEI is doing such a great job that, it's gonna, I just wanna put a little pressure on it. So the money's there, right?
Well, let's plan for that, for the next meeting and, we'll reach out to the actuary and make sure that, they can put some numbers together.
Yeah, that would be great. Unfortunately, I apologize, I have to leave, but I set this meeting up. We've been trying to set this up and reschedule, and I had it set up and then this got scheduled.
Yeah,
I don't wanna go through that again. So,
So
Right.
I would say, would you be okay if we didn't, I know we're gonna have a meeting with SEI after, is it okay if we just table this?
Yeah.
Do you mind? Okay. All right, so, thank you though. I know we have a meeting after that. Any board comment? You already gave board comment. So I'd like to make a motion to adjourn the May 2nd, meeting of the Montgomery County Employees Retirement Board meeting. Is there a second?
second.
Second by Commissioner DeBello. Any board comment? Hearing none, all in favor?
Aye.
Aye, meeting adjourned. Okay.
Thank you.